helping to underpin the gains that we've seen in global equity markets in recent times. Do you agree? Could they be the reason for near-term falls?
I think the currency has a big impact, and of course central banks really play into that, and really helping US earnings over the last few years has been the very weak US currency, which has made US companies' services and products more competitive in terms of offshore markets. Around this region, one thing we're watching very closely is the weakness of the Japanese yen. Japan, of course, is primarily an exporter, but as it weakens its currency, it has major impacts on other countries that export as well, such as Korea, which isn't embarking on an extensive asset buying program as Japan is. So we are watching the trade relations very closely at the moment. Of course, the key difference between the Australian market and the US stock market is that the US stock market is reaching all-time record highs, whereas the Australian market is still quite a fair bit away from 6,851 points. But in terms of earnings growth, we've seen very strong earnings growth coming out of US companies over the last 4 years, whereas in Australia we've actually seen a decline or quite anemic earnings growth from year to year. Having a look at forecasts though, we're at very different parts of the earnings cycle. In the US, what we're looking at is potential weakness coming through now in terms of earnings growth. So a bit of a pullback in earnings growth now being forecast in terms of US companies, whereas here in Australia, we're looking through the bottom of the cycle and looking through to the next financial year, so the next couple of years, and seeing earnings growth emerge from cyclical conditions upticking. So we're expecting to see more of an upgrade cycle here in Australia. Having said that, in the short term, we have seen a very strong run-up for the Australian share market, so it would be healthy to see a bit of a pullback and a pause on the Aussie share market. But in terms of the earnings scenario in Australia versus the US, I think we're at different parts of the earnings cycle, and the US stock market reaching all-time record highs, whereas we're quite far away from those 2007 highs that we've seen.
And Julia, just in regards to pullbacks on our own market, obviously we ended down about 0.6% today. Do you see that as potentially being the start of an extended pullback, or look, it's pretty early to tell, I suppose?
I think we're still seeing some bullish signs on the Australian share market, and while we have seen a few down days in the last few weeks, I guess if we have a look at volumes and what they signal, on the days that we have been down, we have seen very light volumes. For example, today we saw only $4 billion worth of stock going through, and even if you have a look to last week, on the days where we did see strong rises, there's been quite strong volumes, but on the pullbacks and the declines, we've actually seen quite light volumes coming through. Having said that, what's really been driving the Australian market along is the financial space and the cyclicals. One area that's really missed out on this rally is the materials space, and this one's a key one for the Aussie share market because it's such a large part of the Aussie market. And just having a look and just comparing, let's say, the Australian market to the material space, we have the ASX 200 index on top over the past year and the material space down the bottom. And if I just overlay the two, what you'll see is that usually they move together, but what we are seeing recently is this big gap. We're seeing divergence. The Australian market has moved higher while the material space has moved lower. Now, I guess some of the things playing in this sector are the forecasts that we see around key commodities, especially iron ore. And while we see iron ore prices still relatively high around that 145 US a tonne level, Rio Tinto has been quite clear that over the next 18 months, it sees prices coming back to a more sustainable level around the 100 US a tonne level. So it looks like the market's really looking through the current spot prices on the market, instead looking towards the future in the next 18 months. And still, BHP and Rio Tinto, we're still seeing a bit of technical weakness here. We're coming up to some key support levels for BHP, $35, Rio Tinto for $60, and we really need these levels to hold to see a revival in the weakness that's been in the Australian share market, and that's the material sector.
So are you a bit cautious, Julia, on some of the big resource players? Because they are very much seen as, I suppose, the next step, if you like, in terms of kicking our broader market higher.
I think what we've seen in the resource space is that it's been a very popular space to be in the last 10 years, and that means capital has been attracted to it. That's been great news for miners because these mines take a lot of capital to develop. The flip side is that they're expensive to develop, but if we do see supply, the supply-demand equation, seeing supply coming on board, then we could see commodity prices decreasing, and we're starting to see that type of dynamic in key commodities like copper as well as iron iron ore. You only have to look at BHP, Rio Tinto, Fortescue's plans to expand Pilbara iron ore production over the next few years, and it's pretty clear that while we are still seeing demand staying up, what we are seeing is an enormous amount of supply coming on board, and I think that's going to be the problem, and that's what's really going to lead to some weakness in commodity prices. Not so much that we're going to see the demand side of things collapse, but really that we're going to see a lot of supply coming on board.